Welcome to the Agent of Wealth podcast with Mark Bautis from Bautis Financial. In this podcast, Mark helps guide you towards financial freedom, ensure you never run out of money, and create a balance in life that prioritizes what is most important to you. Join us for this journey as Mark draws from years of expertise and guest experts to solve the multiple wealth building challenges involved in your financial life.
Welcome back to the Agent of Wealth podcast. This is your co-host, John Williams, and today I'm joined by Leo Young, founder and managing partner of Cornell Communities, a real estate investment firm focused on acquiring and operating manufactured housing communities across the United States. Leo has been involved in more than $75 million in real estate transactions as both broker and principal, and early in his career worked on the acquisitions team of a $4.5 billion private equity fund. But before that, he was a top regional performer at Tesla, an unconventional path that ultimately led him into building a real estate business focused on conservative underwriting, durable cash flow, and long-term stewardship. As a first-generation immigrant and entrepreneur, Leo brings a unique perspective on how money beliefs, risk tolerance, and scarcity thinking can shape or limit wealth creation. So Leo, welcome to the show.
Thank you, John. Appreciate you having me on.
Yeah, we appreciate you having you. And I'm really interested in diving into this topic. At a personal level, like I have some vivid and amazing memories of this topic. My grandparents were snowbirds, and they had a mobile home, you know, and when I grew up, every Easter we would go down and hang out at their mobile home, and it was just normal to me. Like that's, you know, but the cool thing about the community was it was obviously all mobile homes, but there's a lot around it. So it was almost like they probably had a homeowners association where there was a pool there. Like it was a really cool, tight knit community. And honestly, just a really cool part of my childhood. With that said, like there's also some other parts of this that I'm sure that are unique when it comes to investing. I never thought it as an investment opportunity, if I'm going to be honest. But to start, I'd love to hear a little bit about why you ultimately chose manufactured housing communities. Because obviously there's a lot of like, I have clients come to me like, hey, I want to invest in real estate. And it's obviously a niche. So I'm really curious to hear how your start was and your mindset was in the beginning.
Yeah, absolutely. And let me start by saying that I don't think anyone plans to be in manufactured housing. They kind of just roll into it for one reason or the other. And I'm no different. So for me, I was sat down at one point in time. So my background is in real estate. You know, I started as an investor and then became a broker. Then I was working at a real estate fund for some time. Then I was approached by a mutual friend who kind of sat me down one time and walked me through the sort of investment thesis of mobile home parks, manufactured housing. He's like, Leo, like this is so compelling right now. I think this is going to be right up your alley. I know you like to do good in what you do. So, you know, he sort of walked me through this whole model of essentially continuing to provide the affordable housing to people and just making necessary improvements over time. And that's basically how we derive returns for our investors. So, you know, we make money for them and we continue offering affordable housing for the community. So I'm like, well, okay, that's actually a pretty neat idea, because I think for me personally, I always want to do something that has some sort of impact component to it, because I always want to leave a place in a better condition than I found it in. So that's sort of how I lucked upon this.
Yeah. As far as like affordable housing, I know a little bit about that. I spent a lot of my time in Florida as well. And there's a broad scope as to what retirement could look like, and it doesn't even have to just be retirement. Obviously there's a lot of retirees in Florida. That's why I refer to that. But affordable is a big word right now, right? In just our world, you know, and just looking at houses. And sometimes I look at the prices of houses here and I'm kind of like, how are people even buying these houses? I mean, how is this even a thing? How does that play into the scope of like the overall market and you know, your approach to investing?
It's an interesting business model, right? Because for mobile home parks, we generally buy the land and we rent out the land to the residents who own their own homes. And that has a few benefits for both sides, both the owner and the resident. So for, you know, us, the owner operator, the benefit is that, hey, it's a simpler business model. There's fewer moving pieces. And as we know, the simpler a machine is, the fewer kind of faults that can occur. So we like doing that. We like to just manage the infrastructure, the roads, the grounds, etc. And the resident, they have their own home. They like it. They can build equity over time, as in any other home, and also to make the home their own. You treat a home differently than you rent it, right? For us, that made a lot of sense. And generally, that's how we like to conduct our sort of business plan. Now, of course, that's the ideal case. But for us, when we bring in a new home, we generally buy it from the manufacturer who literally ships it from a factory to our community. Then, we market it, we sell it to the residents, we connect them with the financing company, they'll get a loan on it and be on their merry way.
So that's the way it's no different from like a traditional apartment or condo. Like obviously if they have cash, they could pay cash, but
conceptually it's like very similar. Yeah.
When the numbers line themselves up, is a big part of the outlay for the homeowner rent more than the cost of the house? Like what is it? What are like the breakdown look like typically?
Yeah. So typically both the rent on the land and the home itself, it's in an aggregate lower than a comparable house in the same area. That's sort of the draw to this kind of community. So as an example, like, let's say there's a community in New Jersey, right? So I'm based in New York, so New Jersey's close by. We might rent a piece of land for $700, and then they might buy their home and put it on, and the payments around $900 or $1,000. So then they're more or less $1,700 all in. Keep in mind, this is going to be a 15 to 20 year loan. So after that period of time, then there is no mortgage on that portion. So $1,700 for a new home compared to over $2,000 for a Class C apartment that is, built in the 80s or 90s. So to residents, they like that a lot. It's like that new construction feeling. They have their own space, their own driveway, no neighbors, upstairs, downstairs, left, right. And it's really great. It's like a little subdivision for them.
Is it always just what you're dealing with? Like, what's the zoning look like? I'm assuming the communities are just, hey, you're going to have a house there. They're not mobile in a sense. It's called mobile homes, but yeah.
Yeah, that's one of the structural demand drivers in the industry is the difficulty to get zoning approved for these properties, because two reasons, right? One is that the math doesn't make sense for municipalities to approve these kinds of projects. It just, in terms of the tax burden of each family compared to the cost to service that family, it's roughly, like a 7-to-1 or 10-to-1 in terms of the math. Usually you want to make money. So cities are like, well, we're losing a ton of money just to approve this project. Why would we do this? So they generally don't. And then also the other is just, it's not the highest and best use for these properties. If you have an apartment building, an industrial warehouse or something, they give far more taxes than a, mobile home park, RV park, something similar. And, within each municipality, there's some nuances between if you can move in just a mobile home or manufactured home versus a tiny home versus an RV. So there's a lot of kind of developments in that space, people wanting to offer different options for this affordable type housing. So it's kind of evolving as we go.
I never thought about it that way, like from a tax generating perspective, but that makes a lot of sense, because I imagine that the taxes are based off of some formula that has to do with the size of the homes, and they're obviously, the idea behind this is that they're not like large layouts. And with that said, is there anything else that's different from traditional condos, apartments, that whether it be turnover, tenant behavior? I mean, is there anything that's like unique that kind of molds the way you run your business?
Yeah, so the cool part about the manufactured housing communities is that the average tenancy is far longer than regular apartment buildings. So regular apartment buildings, they might have an average tenancy of 18 months, about like a year and a half before people move, right? Versus for a mobile home park manufactured housing community, they're around 10 plus years. Now, why is that? So it's a combination of the compellingness of the value. So like I mentioned earlier, it's just cheaper and in the long run, it helps people generate more wealth by living there. So they just like that from an affordability standpoint. And also it costs a decent amount to move them. So these homes, they arrive from the factory from a truck. You have to get those trucks out. You have to make sure that you're not damaging the home when you're moving it to another community. So the cost could be close to $5,000, $7,000, $8,000. And, if they're paying $700 a month in rent, that's like a year's rent just to move it. So, generally people, when they're in here, they don't like to leave because it just doesn't make sense to do so.
What stands out to me is, would they potentially be more likely to sell it to somebody else than move it?
Yeah, there's a lot of resales. Yep.
Do people move them a lot?
Generally not. Most people, when they want to move a home, generally they want to sell it because, they've made a lot of improvements around it. Like they've taken away the wheels. They've like had a little garden around it. That's all cute and all. So they usually just sell it as is. And, that's when they make their profits too.
Yeah. What does it look like from like business cycles, like recessions, from just a purely an investment perspective? Does the values of these homes and the investors' ROI perform pretty close to what would be traditional? And when I say traditional, I just mean just like, what we potentially think like apartments, single family homes, traditional real estate, if you may. Is there anything that you found is different, the same?
Sure. Yeah, so I'll answer in two parts. So the first part of how mobile home parks perform generally in recessions, they generally are stronger than all other asset classes. So you can look up some charts of different asset classes within real estate. And just for example, in the '08 crash, the mobile home park industry was the only one to not take a dip in terms of valuation, just because the demand for affordable housing goes up, right? I mean, when times get tougher, people want cheaper living and they come here. So, a lot of our communities, they have huge waiting lists because people just want to come, but nobody wants to leave because when you leave, you move to a worse off place for a more expensive cost. That's one. And as far as returns go, so for us, we operate with the private equity model. So, we generally target around 15 to 20% returns per year for our investors. So the rule of thumb is like we want to double your investment once every 5 years. And that's generally in line with, what a lot of other firms do. It might be slightly stronger than other firms, but the nuance is that, you as an investor, you want to consider like how the investment actually performs in different market conditions, what your risk adjusted exposure is. And for, mobile home parks, it's really compelling because, you have that sort of downside protection as far as demand goes. It's not like people are just going to, stop paying rent or like move out when times get tough.
Yeah. How is the business structure? Are you a GP?
Yes. Yep.
Okay. And then obviously the LPs coming in, like how do people get involved with you? Like are you out fundraising, and what does that all look like for you?
So for the most part, we're the investment sponsor. So, we do everything from A to Z as far as finding these properties, analyzing it, making sure that it's safe, operating is signing on to the loan, which is very important. We sign on to the loan and, personally guarantee these loans. And we operate them, and then we generate the cash flow, manage the financials. Our investors, they're passive investors, they're limited partners, so their involvement is super limited. They just basically decide like, hey, I want to invest in this deal. Let me put this money to work, and you guys get to work for me. That's sort of how it works.
Yeah. Are you in lending or mostly or equity positions, or is it all? It's all lending on the private equity side.
Generally equity.
Yeah.
Generally equity.
Okay.
Yeah, so people get to ride alongside us. So, when we beat the business plan, then, they get the upside.
Is the structure on your end that you usually in the 20 and 2, like, is it pretty close to like the way that you structure?
It depends. Yeah, the 20 and 2 model is more suitable for much larger firms. That's kind of like industry standard, call it. But,
yeah.
Those are non-recourse loans. Those are huge.
Yeah.
They have like huge dollar amounts. They're like, $100 million plans or, something like that. But for us, like, we're sub-institutional. Like, our asset sizes are like between 2 and 7 million. So it's much smaller. So, we also sign on to the loans because it's not big enough for banks to just say like, hey, you guys don't need to have recourse on these. So it's generally somewhere in between. So
Yeah.
yeah.
As far as the investor, let's say we had a listener who was like, "Oh, this sounds great. Like, I want to learn more. Can I get involved? What are the restrictions as far as what you're looking for?"
Sure. So generally, we like to get to know our investors a little bit. So, definitely anybody that's curious, go check out our website, cornellcommunities.com, and learn more about the space, learn more about our team, and then reach out. And once you're in, we add you to our investor wait list to kind of wait for the next opportunity to come. And just the caveat is that deals are very hard to find in this economy. And we're working very hard. We're sourcing not only from brokers, we're also going to sellers directly on our own and, shaking hands and developing relationships. But, we probably only do a few deals a year. So there aren't a lot of opportunities and they fill up pretty quickly.
Yeah. I mean, I imagine when they do come together, they're strong because it's like a niche that somebody is potentially looking to diversify across. I mean, do you find that that's where the investor is really interested in just a new space that's kind of just not like part of their traditional portfolio?
Yeah, exactly. So it's something that has a, kind of good characteristic for, kind of volatile markets, and also just by the simplicity of the business. These generally do have more cash flow and more depreciation, so more tax benefits than other asset classes. So, those kind of three factors are what make it so compelling.
So I want to take a quick step back and talk a little bit about you and some of your money beliefs and, maybe potentially how that helped you early on. I mean, you have an interesting pathway. Like it's like you were this private equity fund, which is a $4.5 billion fund. I imagine that I probably might even know the name if it's of that size. That's getting up there. That's a big shift. And is there anything just in general that you feel like your beliefs from your experience there and your experience with Tesla and just how that whole pathway kind of structured your money beliefs and ended up where you are today?
Yeah, I will say that none of the doors were opened for me. I had to open it myself and prove my worth time and time again. So, I never had a kind of rich dad growing up. Like, I didn't really have good mentorship figures. So, also being an immigrant, like you kind of come to a new country with entirely new systems. Like, you don't know what's going on, right? You're just trying to survive.
Were you born outside the country? Sorry to cut you off.
Yeah, I grew up in Hong Kong.
Hong Kong? Okay. At what age were you in the States?
I came here at 16. Yeah, so I finished up high school here and went to college and then went to work, essentially. So there was no doors open to me. Nobody showed me the way. Nobody taught me the game. So, I just let my curiosity guide the way and was learning about a lot of these things through just YouTube videos, Instagram, like Bigger Pockets, these kinds of things. And eventually, I stumbled upon passive investing. I was like, okay, that seems like a really neat concept. It's basically investing in real estate. You're a part owner. You don't have to do anything yourself. So to me at the time when I was working at Tesla, that was super compelling because I didn't have time to drive and manage my own real estate projects. So that's what I did. And it made a lot of sense. And that sort of formed the basis of how I got here today.
The idea of where Tesla, you're selling cars. I mean, obviously, like that's probably a stupid question, but like,
yeah, cars and solar panels, literally.
I imagine it was pretty early on for them because if it was a while ago, like it's come a long way.
Yeah, it was a tough time. So this was when Tesla was also like facing bankruptcy. The most recent time, around like 10 years ago. Yeah, they were just haters throughout. I mean, like nobody understood what it is. People will come in and be like, Tesla, is that owned by Toyota? Like, oh, these are the cars that catch fire, right? Like what? Like self-driving, so I can go to sleep in the car. I'm like, no. And like, there's a lot of education kind of fighting the wave. But I was very fortunate in that. I mean, Tesla, like the culture was prevalent, like throughout the whole entire company. So, you're working with A players. They believe in the mission. They're really driven, and they bring their A game every day. So, that sort of gave me a lot of the work ethic, and the courage to become an entrepreneur and go my own path.
Yeah, to have been a part of that was probably pretty. I'm sure you have like all kinds of stories when it comes to that. What about the broker side of the business? It looks like you were involved with some real estate transactions. That was separate from the private equity fund you worked for?
Yeah, that was prior to that. Yeah. So basically, the story was I was working at Tesla. I was getting really burnt out on their sales team. And then that led me to looking into other ways to just generate cash flow that doesn't depend on me clocking in and clocking out every day. Because, A, I get tired, but B, also if something happens to me, like I get hit by a car, like I worry about these things. So I looked into that, generate some cash flow, fell in love with real estate. I was like, this is such a neat concept. Like the fact that people pay you every month, like, the tenants and like all these people, and you don't have to manage a thing. So then, I was driven to getting my real estate license. I wanted to learn and earn at the same time. So help people of all sort of different transactions, like residential, commercial, luxury, like investment properties, all of those sorts. And then, was recruited for the fund afterwards.
Did you have your own broker, or did you work with a broker? Or?
Yep, I was under a brokerage. So I was at Coldwell Banker and then Compass.
Okay. What's next? Like, are you adding new funds? Like, are you continuing to like grow this thing? Like, where are you at in your business now?
Yeah. So right now, this is our 5th year in business. We're sort of fortunate to like build a team of people that sort of stand behind the mission of providing affordable housing and obviously rewarding the investors who make this possible. So for us, our ultimate goal is to serve 10,000 families and provide affordable housing for them. So we want to get there. I think the window to opportunity to acquiring a lot of these properties is closing quickly because there's so much institutional interest and also just, newbies getting into the space that just, it makes deals hard to find. So we want to acquire that we can and then just cash flow in perpetuity for investors.
Yeah. I mean, it's so niche. Like here, I think I was telling you, like there's like Trader Joe's, and then like in Palm Beach Gardens, there's like this community. It's like just in the middle, but a stone's throw away from like literally $10 million houses. I feel like Florida's a whole different beast. I'm sure that you've seen, or do you have deals down in Florida? I mean, do you look?
Yeah, we're actually closing on one in a few weeks in Florida. So Florida is a nuanced market.
What part?
To the central part, close to West Palm.
Okay, yeah, I'm like in Jupiter now.
Nice. It is nuanced, though. I will say for mobile home parks, the enemy that you have to factor in is natural disasters, right? I mean, if a storm comes in, that thing's coming off.
Yeah.
It's not like a stick-built home. Well, even stick-built homes are not impervious to nature, but still.
Well, here it's like brick is like the big thing here, obviously, and that's kind of why I was asking is like, is there a territorial part of your business that there are areas you like to go, or you've noticed that it's just better for the business model, and that obviously is an obvious one because here, like homeowners insurance, like even like you move to Florida and you avoid state taxes, but you come here and you almost give it back in homeowners insurance. It's literally that high.
Indeed.
Yeah.
It's crazy. So yeah, for us, we generally like the Southeast, so like the Carolinas, Virginia, Georgia, those places, and the Midwest. We like those two places because the Southeast, there's such great job growth, and there's a lot of companies going there. The AI data centers are going in, and there's just a lot of demand for housing. And the Midwest, it's just a really stable market. It's really business friendly. At the end of the day, like commercial property, we're just business owners, right? Providing a service. So it makes business easy for us to do.
Yeah, no doubt. That's all the questions I have for you today. Obviously, thank you so much for joining us. This is a great conversation, and thank you for breaking down all the realities in your business. And it was eye opening for sure. But before we close, is there a way that listeners can get to know you more, learn a little bit more about your business, your work at Cornell Communities, and get in touch with you directly?
Yeah, so 2 ways to learn more. One, if you want to learn more about our team, manufactured housing, why it's a good investment, maybe invest with us, see if that makes sense. You can go to our website, cornellcommunities.com. So it's CornellCommunities.com. Or if you have other random questions that you want to reach out to, I'll try to help out where I can. So you can reach me on LinkedIn at Leo Young, LeoYoung, or Instagram at Leo Young Real Estate.
Perfect. We'll, of course, include all that information in the resource section of the show notes. Leo, thanks again for being here, buddy. And thanks for everyone who tuned in today's episode of the Asian Wealth Podcast.
Don't forget to follow the Agent of Wealth on the platform you listen from and leave us a review of the show. We're currently accepting new clients, and if you'd like to schedule a one-on-one consultation with our advisors, please do so at bautisfinancial.com/call.
Thank you for listening to the Agent of Wealth podcast. Click the subscribe button below to be notified when new episodes become available. The information covered represents the views and opinions of the guests and does not necessarily represent the views or opinions of Bautis Financial. The content has been made available for informational and educational purposes only and is not intended to be a substitute for professional financial planning and investment advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investments and financial planning.